All right, we've got gold essentially going nowhere again for the fifth day in a row as it continues to test significant short-term support. But before we go further, a quick word from our sponsor. This video is brought to you by XNS, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So gold has been flirting with support around the purple 20 moving average for the last 6 days, really, after a breakout on November 10th. Took it up to a lower swing high at 4,245. That is a key resistance level. But in the short term, we have support down here at the low of the week at 3,998, and then the upside of that range is at 4,133. Those two levels provide a signal for the next direction. A drop through the bottom will have gold almost certainly test support around the 50 moving average, currently at 3,981 and rising, along with the 78.6% retracement at 3,963. You could see recently the 61.8% fib has been confirming support around the rising trend line and the purple 20 moving average, but not specifically. And then the red 10 period moving average here is showing some signs of short-term resistance. So a breakout above the 4,133 is a breakout above the 10 moving average and a confirmation again above the 20 moving average and a move off the 61.8% retracement. That would put it in a position to possibly challenge this recent high, or given how it's been behaving, I wouldn't be surprised to see it to chop around and consolidate for a bit first. The other alternative is that this line is not going to end up being valid with the test of this 50 moving average. Since it is rising, it's possible that it's tested as support without a drop below this swing low right here. That certainly can happen if it happens in a few days since the moving average and rising. Nevertheless, the 50 is the key dynamic support zone currently for this rising trend that began from the second half of August. There has been one sharp rally off the higher swing low bottom, and so there is the potential for a second, but there's no signs of it yet. That would first be indicated above this daily high right here, 4133, I'm sorry. At that point, maybe we'll look at some higher prices, but for now, it needs to get out of this zone, either below the 50 moving average or above this week's high. Now, taking a quick look at the weekly, you can see that this week is a narrow range, relatively narrow range week above support of the 10-week moving average here. That corresponds with the 50 daily, essentially. But it's in the lower half of last week's range, and last week's range closed in a bearish, relatively speaking, in a bearish position, or I should say potentially bearish position, with a shooting star candlestick pattern. However, the pattern is not valid unless there's a drop below last week's low at 3,997, and of course that hasn't happened yet. So put 3,997 as a key price level on your notes as well, because a break below that will trigger the weekly breakdown. It will be an inside week breakdown and a bearish shooting star breakdown if that does occur. All right, that is it for gold traders. Have a great weekend.